So I think clearly for 2019, the outlook's challenging. A lot's changed, particularly in the second half of calendar year 2018. And I won't go through all the macro factors which are at play globally. We all know what they are. But I would add a couple of other extra comments. I think there's quite a lot of bad news priced into markets at the moment. And my thinking there is that if any of these major macro issues, maybe around Brexit, around the trade dispute with the US and China in particular, that if there's a turn for the better there, then I think it's possible, because there's a lot of bad news priced in at the moment, that markets could rebound quite savagely at some point in time. And I think also underlying that, the world's largest economy, the US, continues to be quite strong. But having said that, a challenging environment, no doubt about that, for the next 12 months. I think Australia is not positioned too badly relative to the rest of the world. Now, again, we know all the bad news in terms of Australia, particularly around the housing market. The ineptitude coming out of Canberra in terms of political situation. But having said that, if you sort of look at the positives, there's actually a lot to like about the Australian economy. A whole range of factors, but I'll just summarise some of them. Population growth is always a positive for economies and therefore stock markets. Population growth's come off a little bit, but we still have population growth. Positive demographics, relatively young population compared to many other countries around the world. Budget moving into surplus, AAA credit rating, low unemployment, infrastructure boom, low Aussie dollar, good for a lot of industries, exporters, tourism, education and so forth. So when you look at that sort of that macro if you like, influences are arguably quite positive when you sit back and look at those many issues. So that's it. Then when you look at the stock market, I think the latest sell-off has made the stock market valuations I think more interesting. The long-term PE for the Australian stock market's 14 times. The sell-off in the last little while has taken that PE to just under 14 times. So on a price to earnings basis, the Australian stock market just under fair value. Gross yield of the overall market, that is net dividend yield plus franking credits, 6.5% for the overall market. So again, those gross yields relative to term deposits still remain compelling. But I think arguably the one that's most interesting, that perhaps hasn't had as much focus as perhaps should be the case, is the gearing levels of corporate Australia. Net debt to equity is a measure that we look at. Net debt to equity in corporate Australian listed companies 5 years ago was around about 46%. It's now at about 35%, so it's come off. Interestingly, in the US, it's gone the other way. Which in itself I think is a negative. So I think that whole issue of lower debt levels in corporate Australia is very, very positive for two reasons. First of all, it helps underpin dividend yields. So the old saying, strong balance sheet is the friend of a dividend, I think holds very true here in Australia. I think secondly, corporate Australia, strong balance sheets, if there is a buffeting in terms of uncertain economic outlook, then corporate Australia is better prepared now than it's ever been. In terms of the balance sheet. So I think relatively there's a lot to like about corporate Australia at the moment. So as we know, the stock market's come off quite a long way in a very quick period of time, and within that, on a stock by stock basis, a lot of share prices have come off an awful long way. So in terms of the opportunities, I think it really does depend on your time frame as well. And my thinking on this is that the only way you can sort of overcome this short-term volatility in share prices is to take a longer-term view. So if one takes a 3-year view from here, I think there are a lot of opportunities in the Australian stock market to invest in, businesses which are well managed, strong balance sheets, which we touched on a minute ago, but also offer good value and have good medium-term earnings growth prospects. So I think there's a whole range of companies that fit that category at the moment, particularly on that longer-term view. But just to highlight a couple of sectors, I think in the gaming sector that looks particularly interesting. Some opportunities there. I think, for example, Aristocrat, Star Group, and Tabcorp. And I think in the other sector, which I think is particularly interesting at the moment, which is a little bit racier, if you like, but again, value over the medium term, lies in the mining services sector. There's a theme here sitting behind mining services, and that is that globally mining companies and energy companies resource companies generally have been under-investing in exploration for many, many years. That's now turning, and those things can go in very, very long cycles. So we now start to see that turn up, and mining services companies will benefit from that. Now, in the Australian context, there's a whole range of very, very good opportunities in our view there, both at the larger end and the mid-cap and the smaller cap end. And some of the stocks that we think are particularly interesting there, stocks like Ausdrill, Imdex, ALQ, Monadelphous, Seven Group and SWIG. So a lot of opportunities in the market, but I think within gaming and mining services, some really interesting opportunities there.